Okay guys, so I'm back with the lesson 3 of the market maker model, and from this video and onwards I will be only talking about the market maker sell model. The market maker buy model will be your homework, and whatever information you have so far understood or you have managed to learn out of the market maker videos that I have uploaded so far, you will be trying to utilize those informations or knowledge on the market maker buy model, and you can go through your chart and you can look for the hindsight data. Whatever the information I have provided, you will find it valuable, and you can also test your knowledge about what you have understood so far. So that part being said, in this video there will be a lot of information, and I will be only talking about the buy side of the curve of a market maker sell model, how you can identify that, or how you can utilize or use the information to enter into a trade. So without any further ado, let's start. Previously I have talked about the initial consolidation. From the initial consolidation we are expecting a buy side run, and from a point of interest or after reaching to a certain level, we are expecting the original delivery or the distribution of a market maker sell model. Now when market starts to go higher, what exactly happens? Let's talk about that. The key note here is, if your higher time frame is bearish, you are looking for your market maker sell model. If your higher time frame is bullish, you are looking for your market maker buy models. On the higher time frame, you are looking for something like this. Market has created a sell side imbalance, buy side inefficiency, or a bearish fair value gap. Market is at this level, right? This is where the bearish candle closed. So from that level you are expecting a retracement into that higher time frame point of interest, or the higher time frame fair value in this case, and that retracement on the lower time frame, it will look something like this. When you're looking for a market maker sell model, when the higher time frame is bearish, the best setup will be on the sell side of the curve, or the high probability setup that you will find will be on the sell side of the curve. However, the information I'm going to share with you today in this video regarding the buy side of the curve or the higher time frame retracement, you can utilize that information to participate in the buy side of the curve. So the higher time frame point of interest that I have shared previously, in this case I shared a fair value gap, which we mostly look for because fair value gap is the easiest to understand and the easiest to execute from, and easiest to mark on the chart as well, or point out on the chart. So that's the reason I showed the fair value gap as an example. However, this higher time frame point of interest can be any PD array that ICT have shared or you have mastered so far. It can be a order block, it can be breaker block, it can be inversion fair value, it can be regular fair value. However or whatever you have mastered, you can use that one in terms of looking into this sort of thing. But sometimes there might not be a higher time frame point of interest, but a previous or old buy side liquidity. So market can run and take the buy side liquidity, and then it can start its sell side of the curve or the distribution leg. Okay, so I hope that part is clear. However, if there is a buy side liquidity or a previous high that is sitting right below your higher time frame point of interest, this sort of condition or this sort of market condition will deliver you the highest probability on your sell side of the curve. Okay, because after taking a liquidity, market is rebalancing or retesting a point of interest or a premium discount array from where it can easily retrace or reverse. So we are looking into the reversal, which usually will be a distribution leg. So once you identify your initial consolidation and the higher time frame point of interest from where you are expecting market will possibly retrace or reverse or start its sell side of the curve, which we also can call the distribution leg, You can use your Fibonacci retracement tool divided into 4 different parts, which is from 0, 0.25, 0.5, 0.75 and 1. So you can draw from the higher time frame point of interest to the initial consolidation. So what here is happening, you are looking into something like this. Market has started its move towards the upside or the first leg of distribution. You are drawing your Fib tool to that level and dividing the entire range, which we can also call the BuySide delivery range or BDR. If you can draw that and divide it, what can possibly happen is, even before this move happens, you can expect a few things at a certain level. Number one, from the 0 to 25%, you will find your initial consolidation. Most of the time, or almost every time, the consolidation period or the initial consolidation will be sitting inside of your 0 and 0.25% or 25% of the range of your BDR, BuySide delivery range. Now when market reaches to that 25% or above the 25%, you are expecting a retracement. That retracement can happen in 2 different ways. The first thing is, this retracement can happen if there is a fair value gap around that 25% or just little below that 25% level. You can expect market will come there, retrace, and from here it will continue its move. Now this area, it can have another thing. Remember, market is always doing one of 2 things. Either it's taking liquidity or it's rebalancing the imbalance. So the retracement you are expecting inside of that initial consolidation zone or the first quadrant, it can either be a fair value gap or it can be seeking some sell side liquidity around that area. When that retracement happens, market will go higher. When market is at 50% level, at this area you will find a fair value gap, or you are expecting a fair value gap. This fair value gap should not be completely filled. It should be unfilled or partially filled. That can act as a breakaway gap as well, but at 50% level, that fair value gap is your measuring gap. Okay, so this is where you are expecting a measuring gap. When you identify your fair value gap at that area, which is looking something like this, you can mark it as your measuring gap. If market is leaving it completely unfilled, or market is filling it up partially and then started to going higher or started to expand higher, this is when you can use another Fib tool from that initial consolidation low until that measuring gap high. So until that level. Okay, so when you are looking into that level, the measuring gap, this time your Fib retracement will look something like this. You will take another Fib tools, you will draw from the initial consolidation low until that measuring gap with 1 standard deviation with that previous higher time frame point of interest that you were thinking of. If it aligns with that area, now you are confident about your measuring gap. So when that happens around that area, if you can find the entry, you know that this gap should not be completely filled, and also that determines that you are now at the 50% level of your BuySide delivery range or the BuySide of the curve. What do I mean by that? Is you saw all this, you didn't anticipate any trade here, you saw this happened, you draw the Fib, it aligned. So now you know that market has reached or has done 50% of its manipulation. It will go another 50% or another 1 standard deviation from the second drawing that you have done, and you are pretty certain or you are more confident about your higher time frame point of interest, right? because your fib tool or the measurement that you are doing, it's actually aligning with that area, so you are now confident about that. Now from 0.5 in between 0.75, this area is most likely be your second stage of reaccumulation. So here you are expecting the accumulation phase as your retracement. It will create more sell side liquidity, like here it will create more sell side liquidity, and after the second stage of reaccumulation happens, it's exactly the same thing that you are expecting during these areas. So at that level you are also expecting it's coming for a fair value retracement. After rebalancing the imbalance at that area, usually this move will be very explosive. It's very quick, very fast, and it's very scary move. Why that happens is because a smart money will scare the people away who doesn't have the knowledge from taking sell short at that higher time frame point of interest. They will think market is too bullish or too aggressive towards the upside, so we cannot consider a sell short from there. That's one thing. Another thing is people who looked for or who took a sell short around that area, they will get no chance to exit out of their trade before that damage has been done in the market. Okay, so before that damage is done, people will not find out or people will not be able to exit out of their trade. Same thing with that buy side liquidity. Remember that I have shown, if there is any old buy side liquidity that is sitting, they will also be stopped out pretty quickly without even getting any chance to exit out before that happens. So this move, we are expecting a very high volatility move or very speedy move. Okay, how you can participate into the buy side of the curve with more confluence or more confidence is, once you have identified your initial consolidation and your higher time frame point of interest, when you have drawn your grids, which is the first Fibonacci levels with 0.25 divisions or the quadrants over there, you can now draw or project with another fib that will look something like this. In this case, your Fibonacci levels will be in 0.5 increment on the negative side, but I will explain why. From the initial consolidation low to the initial consolidation high, if you project a fib with 0.5 increment, so negative 0.5, negative 1, negative 1.5, negative 2, negative 2.5, negative 3, negative 3.5, this way you will continue until it reaches to your higher time frame point of interest or come close to that level. Now here, as I was drawing, the retracement or the projection, it's aligning perfectly, but sometimes it will not align perfectly. It will somewhat look like maybe this. It will be very close, whichever level is close to your higher time frame point of interest. If you see any standard deviation is aligning close to that higher time frame point of interest or even perfectly aligning, this is where you are looking for your participation, or in terms of looking for entries when market is at the buy side of the curve, or this is mostly the counter trend. So this sort of influence or confluence is needed. Now whenever you are seeing the grid levels are aligning with your projection levels, for example, if it aligns like that way, this is where you are looking for a buy long. If it aligns here, you are looking for a buy long. If it aligns here, you are looking for a buy long until that higher time frame point of interest. Now since it aligned here, this is the area where you are more confident that market will continue its distribution leg. Now the first stage of accumulation, the measuring gap, the second stage of accumulation or reaccumulation, everything happened perfectly. You are expecting that market will fall from that area. So this is where you are getting your most of your confidence or confluence regarding the move on the market, and you have identified your setup perfectly. So this is where you are actually gaining your confidence. I hope this part is clear. The first way of the grading, it will look something like this. You have identified your initial consolidation, you have identified your higher time frame point of interest, so the grid will look something like this. So the fifth settings for the grid that you can save as a template on your trading platform is 0, 0.25, 0.50, 0.75, 1.0. This is your first Fibonacci retracement. The second one, which is the measuring gap, you are looking for something like this: 1, 0 and -1. Here is the thing that I actually miss to tell you guys. Sometimes based on the initial consolidation, you can see the projection level that can align with the measuring gap low as well. So every gap has 3 measure points: the high, the low and the middle point of the consequent encouragement. You have to look for which level aligns the most. Usually the high will be the thing that will align perfectly with your higher time frame point of interest from where you have drawn your grid. So it will look something like this. If it's sitting somewhat like this way, you will still draw it and see if it aligns or close proximate alignment happens around that area or not. If you can see it's going through that, you can look for the CE or consequent encouragement if it aligns like that way. So using all these three informations, you can predict the high of that buy side of the curve. At the same time, you can know at which stage you are currently at. So I hope that point is clear. There can be more than 2 stages. It will be clear step by step. So for now, I hope you understood the point that how you can draw the measuring gap and where exactly you are projecting from until what far. Okay, so I hope that part is clear. Now about the projection level, you are using the initial consolidation low to that initial consolidation high and projecting something like this. So in this case, your fib settings will be 0 and 1, and you can keep the 0.5 level as well, the positive 5 level if you want, but mostly you will need the increment towards the negative side because you are drawing from the low to the high. It will give you the negative like that way. Okay, so the fib levels will look something like this, and look for your grid and this projection level wherever it aligns with the standard deviations, any of these levels. This is where you will find your high probability setup for your buy side of the curve of a market maker sell model. So I hope this part is clear. If you have any questions, save it for later. As I said, write it in a different page. By the time I'm done with all these things, if still you have any question or confusion, you can ask me in my videos or in my live streams, or you can ask me in my Discord as well. So until next time, take a very good care of yourself, your health, and bye bye.